In trading, there are multiple ways an asset can pull back towards moving averages. Today, you will discover the difference between a violent bar and several bars, when to enter a trade, where to place the stop loss, and when to take profit. This knowledge will put you ahead of the vast majority of traders.
I like to cover how you can still profit from this, and in some ways, and sometimes, you can profit better than the style that stages into the entry, because you have the ability to be more precise with the color change. So let's say, for instance, you want to play the same play that I'm playing. Meta gaps down, rallies into resistance. You're just simply waiting for a color change. You get no color change yet. You get no color change yet until, boom, red eliminates green there. And it's your choice. You can go with the elimination of the body or the tail. Now, some of you might want to do what I do. I do both. When the tail is little, I just include the tail. But if the tail causes me to have to give up a little bit more of my profit potential, I'll go with the body. If it's negligible, I'll go with the tail. All right? But these pennies can add up when you're playing size. So if that tail causes me 6 extra cents on 10,000 shares, I'm eliminating the tail. 6 cents on 10,000 shares is a lot of money, right? Okay. So here is the color change. Boom. Your stop is above the high, and this is your risk. And so your entry, boom, 2 to 3 lots or whatever. Here's your stop. And you're going to start coming out. Now, if you play this according to strict method, you're not coming out of everything on this initial drop. You're coming out of part. So let's say you had 2 lots. Let's just do it with 2 lots. Let's say you came into this with 2 lots here. Stop. You took 1 lot out on this initial drop here. You bring your stop to the break even. So now you're playing with the house's money. You're playing with the market's money. The way I want you to look at this approach, this incremental coming out approach, is that your first profit take is the real trade. Anything else, you're now going to make sure that can't lose any money. But that's not, the second part is really not part of the trade. That first profit is your trade. Now, the second part is the cherry on top of your sundae. You've already got the sundae. Now, can we put a cherry on top of the sundae? And if we can't, we're just going to sacrifice the cherry at break even. But it's better to approach your trading this way so that you don't get into this psychological trap of feeling like you've lost if your extra lot stops you out. That was the cherry anyway. You've already won on the trade. So when you go into a trade for 2 lots, in reality, the trade is 1 lot. The other lot, the second lot, is your cherry lot. That's going for the grand slam. That's going for the home run. We might not get a home run. We might win on the real trade, which is 1, but we're going to save 1 to try to get more. But we're going to make sure that that 1 that's left does not lose. And that's where the break even comes in. So we go in with 2, we're stopped above the high, we take profits on 1, boom, we move this stop to break even. So now we've taken money out of the market. There's no way to lose. There's only, right? We can't lose what we have in our pocket. We can lose what's digitally on the screen still, but we can't lose what we've actually pulled out of the market. That's the point I'm making here. All right. So once again, enter under the green, 2 lots, boom. You do not wait for that red bar to finish, by the way. As soon as the red bar, let me open this up. As soon as the red crosses below the green, boom, 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 you're in that for 2. Here's your stop. Okay. Profit take, that's fine. 1 lot. Move to break even. Boom. Okay. And because of this power bar, I would not be adding here, but normally you're adding on the next color change. That's usually a mandatory add on the next color change. I wouldn't do it because we're fighting green, but I would do it on this scenario, which I'm going to cover in just a bit. But here's your next profit bar. Now let's delve a little bit into why this is your next profit bar. Because when you get the opposite color, it is usually not smart to take profit on the next desirable color. You want to take profits 1 bar. You want to take profits 2 bars after green in a short. I would write that down. 2 bars after green. So here's green. 1, 2. Boom. You can take. Do not get in the habit of taking profits 1 bar after green in a short. Same thing in long, by the way. You're shortchanging yourself. The first red bar is an igniting red bar. The second red bar is your follow-through red bar. You can take profits on the follow-through red bar. You should not take profits on the igniting bar. What do I mean by the igniting red bar? The red bar that's starting the redness all over again after a brief pause from green. This is igniting. That's not a profit bar. Take profits on the follow-through bar. Okay? All right. So that's a good rule. So in another case, see that green there? This is not your profit bar. The follow-through bar is your profit bar. Okay? And let's say, see here? This is not a profit bar. This is a profit bar, and that's a profit bar. And you can take profits on every follow-through bar after that. So if you were in the play still here, this is not a profit bar. No. But this one is a profit bar, and this one is a profit bar. Okay? This is not a profit bar, but this one is a profit bar, and that one is a profit bar. Okay? So, once again, this is not a profit bar, but this one is. Get in the habit of taking profits 2 bars after the opposite color, not 1 bar after the opposite color. All right? Now, with that being said, if the 1 bar after the opposite color gets big enough, you can cut it in half and that becomes 2 bars. So let's say, for instance, this bar kept dropping and dropping. And if it dropped low enough to be considered, you could say, okay, now this is 2 bars really. and I can take profit on the second part. So if the bar gets elongated after the opposite color, that can count as 2 bars. But if it's normal, and this one I would definitely consider as a normal red bar, you're not taking profits there. It's right next to green. You take profits on the next bar. All right? And so if you were playing this without the add, here's how it works once again, step by step now. 1 in 2 lots. That's step 1. Step 2, stop. Step 3, profit take 1. Step 4, move stop to break even. Step 5, profit take 1 again. Out, done, boom. Now, your decision whether to continue trading, whether this was sufficient enough to support your day and move on. For me, this grabbed me $6,800, a little bit less, a little bit more, can't remember the exact number. And boom, how you play this run. So I told you all the cautionary tales of playing a fat bar move up. But what about the multiple bar move up? Nice move there. There's your boom bar right there. There's your add. So you can add here. So you'd be diving into the Tesla clearing elephant bar here. 2 lots, stop. Add on the first color change, 1 lot. All right. Profit taking bar, profit taking bar. All right. Good, good, good. Beautiful. Someone mentioned NVIDIA. Same thing here. Right off the 200. Here's your first fat big red bar. Boom. There it is. 2 lots. Let's get this here. Going into that fat bar, 2 lots, stop. First color change mandatory here. Red eliminates green. 1 lot, you're in for 3. If you want to, you can do another lot there. This is not a profit bar, but this is a profit bar. This is not a profit bar, but this one is, and this one is, and this one is. All right? Your choice whether you wanted to add on the elimination of green here. But very, very nice moves, guys, using these tactics. Some of you mentioned AMD. Oh, beautiful AMD. Here's your move up into that declining 20-period moving average. Guys, remember that 20-period moving averages are zones. Moving averages are zones, areas. Don't look at that like a skinny line. That's a zone. So you're coming right into the 20-period moving average, the declining 20-period moving average zone. Here's your first fat red bar, eliminating green. Enter. 2 lots. Stop. Okay. And all right. First color change if you want. Boom. There's your whale. 1, 2, 3. Out. As I've always taught you, whales, after whales complete, a lot of times the nature of the stock changes. Okay, good job. Now, let's go back to the meta and let me briefly walk you through the secondary potential trade here. This is another potential trade where the red eliminated half of a solid green. So here's another trade. Boom, boom, profit take. All right. Again, you're still kind of close to this power bar, so I'm not surprised that you got this move up. But this is the one I really want to cover. So here you're moving up, moving up, moving up, moving up, moving up. Where's your first fat red bar? Boom. There's your entry. Stop above the high. Okay. I'm okay with you taking 1 off here. Getting in on the next color change. Where's the next color change? See that green there? And this red eliminates it. There you go again. Boom. You can do this color change again if you want. Profit take, profit take. All of these profit take, profit take. But the thing is, guys, see the green? Now this bar is profit take and profit take, not this one. See the green? This bar is profit take and this bar is profit take, not that one. Okay? See the green? This bar is profit take and that bar is profit take, not this one. Green, not this one. This bar is profit take. So I think that's a major theme today that I want you to be aware of. This is what I would call a profit extension technique or profit extension concept. No profit taking on a bar right next to the opposite color. It's the two bars after the opposite color, whether you're long or short. All right? Two bars after the opposite color.